Hello, everyone. My name is Christopher Carmona. I'm a CPA and a CFE located in Los Angeles, California. I work primarily in Orange County and Los Angeles doing IRS representation, taxation, and foreign transactions and bank account information, forensics, among other things. I would like to go over a quick overview of how the IRS collection process works. And then I will note that I have other blogs and I will do other recordings showing many of the different components that entail IRS collection. But for now, we're just going to do a brief overview. So the collection process is basically this. You file your returns with your CPA or by yourself or with your enrolled agent. And when those returns are filed, a tax is assessed. Most of the times that liability is taken care of by your withholdings in your W-2 or through your 1099s, through your IRA withdrawals. When it's not, and you've underpaid, you have a tax liability. When you overpay, you get a refund, in which case you probably wouldn't be watching this. So we're going to assume that you didn't have enough withholdings, or you had some event that triggered a large amount of income, and now you have a tax liability that's been assessed on a return filed. You know you have a liability because you either didn't pay it or the IRS sends you a notice. They don't call you. Keep that in mind. Whenever you get these phone calls demanding payment from the IRS, it's not the IRS. Those are just scams. They always send a billing notice. And that demand for payment is a letter that hopefully you've opened in the mail and looked at and addressed, or you've looked at it, figured out you don't have enough money to pay it, or want to know what you can do about it. Keep in mind, as those billing notices grow older with time, the IRS has a mandatory lien that arises against any of your assets. Those are statutory liens. So that lien is by statute. So they can't help it. They can't get rid of it till you pay your bill. Now, if the amount you owe is greater than $10,000 and the IRS has a notice to file a tax levy, after 30 days, you're going to have a final notice. And that's when your appeal period begins. You want to make sure that you file that appeal before that 30-day period is up. If you do not, you will forfeit your right to appear in tax court, among other things. And we'll probably do another video regarding that as well. After that appeal period ends, levies are issued. So that's essentially the collection process from A to Z. Now let's talk about what we can do to resolve your debt throughout which component of that collection process that you're in. 3 things you got to do. Tax compliance, which I'll get to next. Contacting the IRS, that could be either you or your tax representative. And proposing a tax resolution. And let's go through those. Tax compliance. Compliance means you have to be current with the IRS. What does the IRS define as current? Last 6 years returns. That's it. That's what they want. Once you can show that you filed all those missing last 6 years returns, you're in compliance as far as reporting. You have to make all of your current tax payments. What does that mean? Well, if you're a W-2 employee, you have to have enough withholding taken out of your paycheck to cover your tax liability. That means you can't come in to the IRS with 10 exemptions and you're a single male or female and you owe a bunch of money next year. It's got to be sufficient to cover your tax liability. If you're self-employed, you have estimated tax payments. Have you been making them? If not, you need to make them. You've got to be current. If you own a business, quarterly payroll tax deposits need to be filed and paid timely. Last thing I want to mention on compliance is make sure you don't throw money after old debt because there are statutes. So contact your professional before you start paying down these old things. Look to be in compliance first. Then you're going to need to talk to the IRS. Your power of attorney for your attorney, CPA, call them. Get any missing returns that we discussed in the last slide in, make any current payments that we discussed in the last slide in. And we're going to make a proposal to resolve the tax debt. How do we do that? Well, there's three things. You can have a CNC status, which is non-collectible. You can have an offer and compromise, or you can have an installment agreement. CNC is exactly what it means. You can't pay it. Offer and compromise is an offer to settle whatever your tax liability is for less. And it's based upon your inability to pay. What does that mean? There's an RCP calculation. It's reasonable collection. The IRS will go through a formula, look at all of your bills, what you owe using IRS standards, local standards, and they'll come out with a calculation. You can do this on your own on the IRS website, or you can hire someone to do it. The expertise involved in creating these is important, which is one of the reasons I do not like when you go on your own, but you can do it. The other thing is an installment agreement. That is a form of a payment plan for the full amount that you owed. There are three types of those: regular, streamlined, and partial pay. So, and we will definitely go into those in a different slide and also different blogs. So that's kind of the ins and outs of the IRS collection process. What they are, you owe money, how to resolve that money that you owe them, and your different methods of resolving it. So if you have any other questions, or you want to look at more, or you want to go to my blog site, go ahead and link to my website, or shoot me an email and we can discuss it further. And I hope you have an excellent day and resolve your tax issues as timely as possible so that you can minimize those interest and fees. Thank you. Bye.